Hello and welcome everybody to the second installment of the Bertha Centre and Impact Investing South Africa's webinar series. If you missed the first one, don't worry, we will be sending out both the link and the report in the follow-up email to this, so you can catch up on all the exciting things that happened in that one. My name is Natasha Dinham. I am a Senior Project Manager at the Innovative Finance team at the Bertha Centre for Social Innovation and Entrepreneurship. And we are very happy to have you joining us today for this very prevalent topic at this time. For those of you who are joining for the first time, Impact Investing South Africa is the national task force for impact investing in South Africa. We as the Bertha Centre are very proud to be the Secretariat for Impact Investing South Africa. And as some of you may know, we were planning on hosting the Global Impact Investing Summit later this year in Johannesburg in partnership with the Global Steering Group for Impact Investing. As we've all been hit by the global pandemic, we unfortunately cannot have that in person this year, but we're going to be having that in Joburg next year. And in the meantime, this year we will be going ahead with a virtual summit. So all of the excitement, less of the crowd. So in preparation for that, we're running this webinar series. Just reflecting on the last webinar, we focused on, at that time, the discussion was all around emergency responses. That was about 6 weeks ago. And now the narrative and the dynamics have shifted really to a talk about what do we do next and how do we build better. And so today we are talking to 4 leaders who are going to be sharing what their plans are for their long-term response, how they've been affected by COVID-19, and what's next in terms of using impact investing as strategies to achieve that. The speakers will all be taking questions immediately after their sessions. Each speaker will speak for 10 minutes, and then there'll be a Q&A session. So please do pop any questions you have in the Q&A box. There's a button below. And they'll be addressing those right after their presentations. So before we get into that, I would like to introduce our very own change maker, Elias Masilela, who is the chairman of Impact Investing South Africa. Elias, over to you.
So thank you very much, Natasha. I would like to to welcome you on behalf of the Impact Investing initiative in South Africa, which I am proud of having been a part of from almost day one. And I can say a lot of things have happened since the initiative was put in place. But what is very important to note is that Impact Investing South Africa are not implementers. They just have the fortunate position of having convening power purely from an intellectual point of view. They don't have policy decision powers, they don't have cattle power, they don't have hand power. They just rely on the intellectual capability that they can bring to the table. For the dreams of Impact Investing South Africa, we rely on partners, we rely on the practitioners, we rely on policymakers to make sure that the environment is right for us to be able to do what impact investing is about. One may ask what is so critical or important about the timing that we're in with respect to impact investing. I've gone out to say for the past 2 to 3 months, for the world, people would say it is the worst of times. But I say for impact investing, it's both the worst of times and the best of times. And why it's the best of times is because given what has happened globally recently and what we're living through today, it has made it that much more easier to sell impact investment, to sell the impact story. I can bet you nobody you can talk to today would tell you they don't understand the value of investing in health, the value of investing in education, in infrastructure, and other related impact decisions. What has happened as a result of COVID is that almost risks have been equalized between the rich and the poor, between the developed and developing economies. What impact will bring to this equation is what I call an equalization of opportunities. And if we invest right and we sustain those investment decisions, in the medium to long term, the only thing that one can hope for is that we can be able to manage down risks, not only for those who have, but for everybody else. And it's quite interesting to note the record that ESA has already documented since it started operating. Ample has been done, ample impact has actually been felt. One of these is that we've already been selected to host the 2020 summit as South Africa. We've missed that, but fortunately we've been given the opportunity to host it again next year. What that means is that this gives an opportunity for South Africa to be in the limelight, for the whole globe to focus on what we're doing. And this is an opportunity for us to shine, and an opportunity for us to show the rest of the world that things can be done differently, and impact can actually be used as that tool to change the circumstances in which we are in. And what we also observe is that the message is being heard. It's going around both in the public and private sector. You would have noticed in the messaging from government, particularly from the presidency and the president himself, on several occasions, they have indicated or emphasized that impact is the next story going forward. What is even more important, if you think about impact from its DNA or its origins, is that it is private sector led by owners of capital who don't wait to be told what to do or where to invest, who invest understanding that the benefit is also for the security of their capital going forward. And we've actually seen leadership in South Africa as a result of that. And a lot of South African private sector entities are already talking up the concept of impact and making sure that we deal with the issue of inequality, which reminds us of the underlying theory of the adoption of the SDGs, where the heads of state concluded that the biggest risk for society today, or then, and including today, is inequality. If we don't invest to bridge the gap of inequality, the likelihood is that the capital that we think we're in control over today will go up in smoke. The governments that we have today, and we understand the way in which they operate today, they may be completely different going forward. And there's quite a number of institutions that have gone public in embracing impact. I am inclined not to mention names, but what I want to emphasize is that they are building on the foundation that has been put together by pension funds such as the ESCOM pension fund and the government employee pension fund. And this, building on this foundation, I'm hoping is going to increase the collaboration that takes place between private sector and pension funds, and between private sector pension funds on the one side and government on the other. However, those entities that have gone out embracing impact and saying that is going to be part of their investment philosophy going forward, this to me is still just a marketing gimmick. They shall be judged on the consistency and the extent to which they stick to their word in terms of delivering on impact. And what I would want to plead to people who are on this call and people who are not on this call is that we rely on your capabilities to be able to deliver on this vision, on this dream. We rely on people who are making decisions on where and how to deploy capital to make it a living decision and a living action of society. And we welcome you to engage with the Bether Institute, engage with ESA, and be part and parcel of the processes and the decision-making of ESA, so that you can be able to infuse your thinking into the thinking of the impact investing movement. That is my introduction, and welcome into this debate. And I hope that we will come out with interventions that are going to bring about this collaboration that we're calling for. Thank you very much.
Thank you, Elias. And thank you also for reminding us that when we talk about unprecedented times, we're not only talking about a global pandemic, but we're talking about snow in the Gauteng. So these really are strange times that we're in. Yes. Thanks, Elias. So we're gonna move over to our speakers for the afternoon. And just a reminder that speakers will be taking questions. If you have questions, pop them into the Q&A box. You'll see the button on the bottom of your screen. And so to kick off, our first presenter will be sharing insights on Old Mutual's response to the crisis and their long-term impact goals. Now, Old Mutual is no stranger to the impact world, and today we're very pleased to have Howell George, who's their Director of Investments, join us. Over to you, Howell.
Thank you, Natasha. I hope you can all hear me and maybe see me. I'm not sure, but I hope you can see the slides. Yeah, my job is to be the Director of Investments at Old Mutual Investment Group, so I'm very pleased to be here. And thank you for the invitation. Building Back Better. Next slide, please. I think we have an opportunity here to make the world a better place. You know, there is an opportunity coming out of this awful crisis. And I'd like to split my slides, which will take about 10 minutes, into maybe two main sections. Number one is the first slide, which is the short-term response of Old Mutual to the crisis. And the second is the longer-term integration and sustainability response. In terms of the short-term response, I like to think we've been reasonably good at this. I hope we have. I think we've done our best. And we've certainly done a lot of different things. We try to capture it on this slide. Maybe the bottom right is the most tangible, in the sense that we have partnered with Lancet in terms of testing and rehabilitation and treatment facilities, and opened a number of facilities for, to help with the pressure on beds, particularly in the Western Cape region and elsewhere. We've also partnered with government in the bottom purple box, in terms of bringing free radio and TV lessons, for example, to learners in grades 1 to 12. And helping within state schools to deliver that much needed education at a difficult time. I guess the biggest headline was the 4 billion rand of free cover to essential healthcare workers, which we did pretty expeditiously towards the start of the crisis. I think we were all quite proud of that, in terms of being able to help those workers on the front line in terms of much needed, insurance cover. The Solidarity Fund, we've been very involved in terms of both the administration of that fund and helping with that. Partnering in terms of our payroll effort, in terms of allowing our staff to donate in a very efficient fashion to the Solidarity Fund. Again, we did that, I think, fairly early on. And direct assistance. We put 90 million rand in total in terms of emergency COVID assistance and also support to SMEs. And looking around us right now in terms of the crisis, this is not going away very quickly. The number of cases is accelerating. And the economic damage itself, of course, associated with that is profound. And I'm sure we all look around us with dismay in terms of what this is doing to people's lives and the support that businesses are able to provide. Luckily, as Old Mutual, I think we have some scale to be able to step into the space there. Next slide, please. So that's our short-term response. I think in terms of the longer-term building back better, we've been working on this, I guess, for a long time. I mean, I joined Old Mutual 7 years ago from the UK and was really struck by the social consciousness in terms of Old Mutual and its employees, our desire to give back to the community, and also to partner in terms of our investments for clients in investments which had some form of impact in terms of the economy around us. And this slide attempts to capture it. It's really a symbiotic slide, in the sense that we're lucky enough to have quite a large number of customers across South Africa, around 6 million customers across the country. in terms of life insurance and savings policies. And we're able to recycle those savings into investments domestically, predominantly, which can further, the betterment of communities and education, and healthcare, and business growth across the country, which in itself then helps the people who have entrusted us with their savings. And that's a virtuous loop, when we get it right. And it's very important that we do get that right in terms of the way we approach the investment of that capital for our clients. If I could have the next slide there, thank you. And this next slide captures, what we're trying to do. I think the heading is important: dual focus of our returns-focused investments. It used to be an either/or for environmental, social, and governance investing. I think it has fundamentally changed. We did try and make that point many years ago. We think it's an additive. When you're investing in a very direct way in companies where you take into account their environmental footprint, their impact on society, and their governance structures, tends to lead you towards higher quality companies, more sustainable companies, and therefore higher return companies. And therefore the returns you're able to provide to savers is commensurately higher. So we see the integration of ESG, which we do across our investment range, across all the many hundreds of billions of rand we're entrusted to invest on behalf of our clients. We integrate ESG across the board, and we think that's additive to our ability to generate returns for clients. So there's no trade-off here in our mind. And secondly, investing directly in impact projects and infrastructure through our real assets program. Again, one can have a very direct and positive impact on the economy around us through education. I'll come back to that in a second. Healthcare and agriculture, we have very active programs. Infrastructure, of course, and all those green-related issues which go with that, which are essential if South Africa is in any way going to come out of this crisis in any way decent shape. I'll catch the next slide, please. And what we're trying to do is deliver that in both, as I mentioned, the listed equity arena and the real assets arena. So in listed equity, for example, as well as integrating ESG across the board, we also offer very direct ESG product into the marketplace, which people are able to purchase through our retail channels. On the left, in terms of our passive or indexation products, we've been doing this for many years now. We have around 30 billion rand in assets under management. In global and emerging market indexation product with an ESG tilt within that passive framework. And on the right, we're very proud to have launched just last week a South African ESG equity fund, which is an active fund which targets those companies with demonstrably superior ESG credentials and those which have a low carbon footprint. So if you were to buy that particular fund, you'd A, get good ESG within your portfolio, and B, you'd enjoy a 40% lower carbon footprint than the index. Next slide, please. Alongside that, we have a very substantial stewardship program in terms of the assets we're entrusted with on behalf of our clients. And we engage in two levels. One, on a company by company basis, where we have an extensive, what we call alpha engagements, directly with companies. You generally wouldn't see these in the press because they tend to occur in private. And I think rightly so, unless it gets to the point of entering the press. Steinhoff, of course, is one of those which did enter the press, where we continue to be actively engaged on the governance side. Sasol is an interesting one in terms of its carbon footprint. That's a very important engagement for us in terms of balancing the energy needs of South Africa with the broader desire to get to a lower carbon footprint as a society. That'll take some time. And on the right, engaging across the market and across the industry with obviously respected industry groups, both to further environmental and climate change type endeavours, and also to engage in terms of better governance across the market as a whole. I'll take one more slide and then take a couple of questions if there are any at this point. I'm first up, so there may not be questions yet, so I'm quite comfortable on that. The final slide is our investment in real assets across the economy. It's a big number, 131 billion rand invested in the green economy. We're only able to do that because we happen to have a large number of clients who entrust us with their savings. And we feel these investments will both generate strong returns and have a positive impact across the country and increasingly across Africa. So agriculture, you can see we own and manage 10 farms across South Africa and employ many workers across those farms whom we educate and educate their children and supply housing to. In education, I think it's north of 35 schools now, with well north of 20,000 children across the country, all within the affordable school system, with a 92% matric pass rate. Renewable energy, probably our biggest program. Yes, it is our biggest program, 35 billion. We're hoping to do more there. Please allow us to do more, government. We would love to partner with you more on those projects, which again provide good returns for clients and an essential investment in the strategic asset we have for South Africa in sun and wind, both of which we have a lot of. And finally, affordable housing. We build and rent and sell affordable housing across South Africa. And that has a very demonstrable and direct impact on those around us within the country. Those are my slides, Natasha. I'll take any questions if there are any. Perhaps I'll just emphasize one last point before I hand back in that sense. I think an obvious question is always the potential trade-off between generating returns, which we all must do, by the way, and that's a social good in itself, and having an impact. Is that a trade-off? And we're now seeing study after study globally. Morningstar was the latest one, I think probably the most extensive one, which has quote unquote proved, according to that study, that alpha or excess returns are greater for those portfolios which have an ESG a tilt to them or an emphasis within them. And that's obviously terribly good news. And we've seen it in the last year to date as well, in terms of this latest crisis, where again, those portfolios, ours included, which have an ESG bias, have performed better than the underlying market. So I think that talks to quality of those kinds of portfolios, the sustainability of the companies within them. And this crisis is teaching us that sustainability is the crux of good investing and good living and good nationhood. So that's, I think, a strong foundation from which we can grow. Thank you.
Thanks, Howell. We've got two questions in the Q&A box. First one, what is preventing you from building larger portfolios in these sectors? For example, agriculture, affordable housing, and education.
Well, that's a great question. Thank you for it. I think you might have noticed my little plea towards the government in terms of renewable infrastructure. I think Old Mutual might have taken 40% of the initial round, which was about 8 years ago now. And we do have strategic assets in sun and wind. And we can generate an awful lot of electricity from those. And people like us, we're prepared to put in private capital to those projects. So for government, it's a wonderful public-private partnership. So renewables, we're looking to government, because we have to partner with government in terms of those arrangements. And I think we're getting there. Things like agriculture, again, frankly, the land expropriation program, politics aside, doesn't help in terms of investing into farmland often, particularly for offshore investors who want to invest into Africa. They get concerned that we're going to get some kind of repeat of a Zimbabwe situation in terms of land expropriation. And I'm sure we won't get that. But if you're an offshore investor and you can choose anywhere in the world, then why take that risk? So a stable political and economic environment is terribly important for these long-term projects. So again, it is a little bit of a partnership with government with a lot of these real assets projects. And we're very constructive around that conversation, and we'd welcome more of it.
Fantastic. Next question, how mature is our investment community to invest into ESG in South Africa?
I think in South Africa, we're partly ahead of the curve globally and partly behind it. I think if you look at places like America, they are behind us in terms of awareness and active integration of ESG into portfolios. Southern Europe would be behind us. Asia would be behind us. The Middle East would certainly be behind us. The UK and the Nordics would be ahead of us. But in South Africa, we have a very mature and strong debate in this area. I'm thrilled to say we've got 12 dedicated ESG specialists within Old Mutual Investment Group who do this all day, every day. And we're able to offer those kinds of products and partnerships, which I'm sure a lot of our competitors are as well. And so in that sense, we're in a strong part of the curve. Where we're behind is our investment into real assets. And often investment into real assets provides that sustainable bedrock for an economy to grow in a sustainable way. So if you take pension funds offshore, they'd be averaging around 20% in real asset investment. In South Africa, the number is 2%. So in that sense, in terms of deployment of capital, more assets from pension fund investors into real assets is a win-win, because there are good returns to be had, they're great sustainable returns, and they have a great impact on the economy around us, which we're all going to, our children are going to inherit when all these savings come to fruition, and we'll be glad we've done it.
And then what are the typical return targets across the various sectors? And this is a two-part question. Also, how are you measuring and reporting on the impact?
The measuring piece is fairly actually straightforward. If you were a client and you had a listed portfolio with us, you'd get a full responsible investing report in terms of our activity on your behalf, in terms of the companies we engage with, the kind of footprint they enjoy or otherwise within the portfolio. And then on the real asset side, we put the footprint on the slide in terms of the impact, the number of people educated, the workers supported, the homes built, the children educated. So in that sense, it's a very direct line of sight in terms of the impact, you have. In terms of the return profile, it varies. In terms of renewables, that was very strong around the first project. It was high teens, early 20% IRRs. Now it would be kind of 12, 13%, I would guess, coming down the line, I would think, when we get those projects hopefully going again. Agriculture would be a little north of that. Again, these are kind of 10, 12-year projects, don't forget. But if you have in your mind for real assets kind of low, mid-teens, I think that would be a good benchmark, which would be typically 3 to 4% north of what you should expect an equity market investment to do.
And then an interesting one here. So as from the perspective of a director of a listed company, how can you align that company to be a target for Old Mutual's ESG fund?
Well, that's something we attempt to help corporates with. Through our engagements with corporates, and we spend a lot of time in terms of, first of all, their ESG reporting, and a lot of companies getting obviously very good at this now, hopefully ourselves included as Old Mutual. And that awareness profile in terms of the ability of investors to then see exactly what the ESG type approach is of a company. So ESG reporting is important, and we spend a lot of time with corporates on that, and actually push them very hard in terms of the metrics around that. And the other associated metric on that, which is very important for a corporate, where they can align with us, is the alignment of incentives of executive management and other members within the organization of that corporate with the ESG outcomes. So it's all very well for a company like Sasol to say we're going to reduce our carbon footprint over the next decade. And I think a decade is what we're talking about. But incentives need to be aligned with that. And that alignment is terribly important. So again, we attempt to help corporates with those alignment measures. And therefore, that symbiosis I talked about in terms of the savings pool, us as asset managers, the corporates, everyone's benefiting, from that ESG program in a very direct way.
Fantastic. And then how does the new ESG fund, the index, and this comes with a little well done message as well, differ from previous indices where perhaps one of the criticisms was that they're not sufficiently differentiated from the traditional market?
Great question, and thank you for the thumbs up. We're absolutely thrilled with this. I must say it's been a lot of work. It's not a benchmark, so it's not a passive product, it's an active product. We will measure its performance against the normal benchmark, and that allows us to be pretty active against that standard benchmark. Trying to construct a passive product is actually very difficult in South Africa because you end up a long way away from the regular benchmark. So we prefer to have an active approach in that sense, and that allows us, using our own proprietary ESG signals, to integrate those very strong ESG signals in terms of the best companies, the best-in-class companies, and those companies which are improving in their ESG credentials, to be a strong part of that portfolio. And we do believe there is alpha efficacy with that linkage. So we think those companies will perform better as well as being better in the ESG category because they are better quality. And it also allows us to be quite aggressive in terms of a very low carbon footprint, you know, for that particular portfolio, for those clients who want that. And I should emphasize, you know, at this point, you can't go to a zero carbon in South Africa. You know, we will take time to get there. So we need to be intelligent in terms of the transition. But as part of a portfolio for those clients who would like that kind of much lower carbon footprint, I think it's a great statement. And I think it'll be good for our country in terms of investing in that kind of portfolio.
Thank you so much, Howell. We've got a bunch more questions, but I'm afraid in the interest of time, we're going to have to move on. Thank you, everybody who put together questions. And thank you so much, Howell. That was a fascinating insight into the work that Old Mutual is doing, and much appreciated.
Thank you.
Next up, we'll be hearing from Jared Moodley, who not only heads up shared value at RMB, but is also the chairman of the RMB CSI Fund, and one of the leading thinkers of how we use impact finance across the capital spectrum. Jared, over to you.
Okay, video on, mute off. Good afternoon, everyone. I hope everyone is keeping warm today. I certainly am. And that your spirit remains strong over this challenging time. Thank you to Natasha and the team from the Bertha Center for creating this platform where we can share and learn together. Quick introduction. My name is Jared Moodley, and I'm extremely passionate about the potential of impact investing, both for South Africa and for the rest of the continent. I work at Rand Merchant Bank. I've been there for almost 12 years now, predominantly as a debt deal maker, but I've recently taken on this new role in shared value. So Natasha asked me to share the journey that we're taking within the bank. And I'll touch on that, and it'll be at a fairly conceptual level and in the context of today's topic. So I'm putting up some slides quickly. Building back better. So I think firstly, I've got some smart art on the slide, and I think it's particularly relevant, especially for my my personal journey. And I want to just chat about that quickly. So I was someone that was, I think, good at my job, and I really love being surrounded, and I still do love being surrounded by the incredible diverse talent that we have at the bank. But there was a tension, I'd say, you know, an uneasy feeling that required some focus and some introspection. And after doing that, I think I quickly realized that I value social responsibility at a personal level, and what that means for me is I need to better understand the impact that my work has on society. And once I realized this, I found many others within RMB that felt the same way. And it didn't take us long to connect, you know, with this topic of shared value and shared prosperity. And I'm going to use those terms interchangeably, and I'm comfortable to do so. So I hope you guys are comfortable for me to do that as well. And I think it's been, for me, particularly exciting just to see within a business context, you know, how many business leaders have been amplifying this concept in recent times in so many spaces, particularly on a global stage. But I think I want to position up front that, you know, we shouldn't just locate and engage on this topic at an institutional level, such as RMB. I think this topic exists and needs to be engaged at numerous levels. So if I think about it from a personal perspective, I need to think about, you know, what steps am I willing to take to contribute to this? At an institutional level, we'll have to think about our business practices and the values and the objectives that we target as a business. And then at a national and transnational level, we'll have to think about policy and regulations. And I think for me personally, we're gonna get the best impact and the most momentum when we can align effectively at these various levels. And I think that's why common language is so critical in this. So I was particularly fortunate that RMB decided to focus on this concept, and that ultimately led to my new role as head of shared value. I just want to be very clear up front that we're still at the development phase of this initiative. We are not looking to claim anything at this stage. We are looking to embed these principles across our business pillars and business units, which I think reflects the ambition that we have, which is obviously hugely exciting, but at the same time, we feel that because of that and because of the tensions and complexity, we do need to take a careful and considered approach. So let's chat a bit more about this. Now, I think many on the call are familiar with the topic and concept of shared value. So I think many would agree with me that it's not, the topic itself is not complex and difficult to understand. The challenge is really how we translate it into core business activities. Now, from an RMB perspective, this is particularly relevant for us when you think about the markets that we operate in. And if we had to sit back and think about, what are these big picture issues that are going to impact the long-term sustainability and health of the business, then it's pretty easy for us to identify the unsustainable levels of poverty and inequality that impact society in these markets. And we also need to consider the tension that exists between economic infrastructure in these markets and the environment. I think this has been touched on already, but particularly with respect to carbon-related activities. And let's be frank, many African countries have become dependent on these activities for their economic health and the well-being of their citizens. And we have to recognize that this is not sustainable when considering the current climate crisis that we're facing. So we have to work on this just transition to a more balanced economy going forward that recognizes the climate risk that we face. Now, from a business perspective, activities including our own impact and are impacted by these two big picture issues. So we are currently understanding this in more detail. Really understanding these externalities, these two-way externalities that exist between our business and society. And we plan to grow and promote this awareness so that we can both make better decisions, but also to enable us to identify opportunities to innovate with our skills, and capital to hopefully generate positive externalities for the benefit of our clients, the economy, and society. So we had started on this process, and then COVID-19 came about. And we have to recognize the additional challenges and tensions that come with COVID-19. But at the same time, and I think Elias touched on it up front, it also brings massive opportunity. I personally believe we need to accelerate our initiative following COVID-19, especially if we are going to make our contribution to building back better. In that context, we are going to think about capital and the effective transmission of financial resources. We will have to think about ideological considerations, and we have to think about the relevant themes that are impacting the global financial markets. So let's get into that in a bit more detail. So with capital, I think we can all appreciate that with building back better, there's going to be a period now of recapitalizing balance sheets, both at a large corporate and at a small business level. And we have to factor in the downgrade. We have to think about the macroeconomic outlook, and that's going to require a more disciplined approach. And it's going to need us to be very intentional as a financial intermediary to contribute to this concept of better transmission of financial resources. What that means is we're going to have to originate for the market. We're going to have to originate where the needs are, and we're going to have to anchor sustainability and transparency in our product development. With ideological considerations, I think all businesses, including RMB, need to acknowledge this evolving landscape. And I think we should acknowledge it from at least not from a position of judgment, but rather from one of acceptance. We will be focusing a lot of our efforts on allowing better access to our products and services to more marginalized communities. And I think we feel that by doing that, we will improve the livelihoods of more people and at the same time, generate a lot of opportunities for the bank. That will allow us to play a more constructive role in the shifting landscape and narrative. And then finally, we should embrace the global direction in this regard. And specifically this focus on thematic investing. I think it's a great opportunity for us to structure, not just for foreign capital, but for multi-stakeholder and blended finance products that really provide better impact for the beneficiaries that need it. So the way I think about it is the bank has great tools. We have incredible talent, capital, we have systems. And now what we're doing is we're really focusing on embedding these principles of shared value and shared prosperity within our framework so that we can use these tools for, real meaningful impact. So that is currently where we are in our journey. I appreciate this platform and the networking opportunity that comes with it. So I wanted to highlight some of the areas that we focusing on right now. And we'd welcome further engagement from both people and institutions. And we really are looking to, collaborate and work with many people for much better impact. So if I could just go through it quickly, from an underserviced segment perspective, we think there's a lot of opportunity in emerging agriculture and affordable housing. And we can obviously leverage the skills and expertise that already exist at a FNB level for some really significant impact. We've had some quick wins in this area, but we really are excited about the potential for possibility, and we look forward to achieving that by working with others that are really, I would say, strongly aligned from a values perspective. As a bank, we often speak about financial inclusion, but what we're also doing now is focusing a lot of effort around product development that allows more customers to accumulate wealth. I think it's particularly important, and we really are hopeful of the impact that we can create in that space. I think we've touched on climate already. I think this is going to bring a lot of big institutions together. I think we understand the hurdles, but we will be focusing on climate mitigation, climate adaptation from a large scale perspective and from a small scale perspective, and particularly, this theme around green and blue. And then finally, I think we shouldn't underestimate the key objective here. And I think for me, the objective is still, how do we mainstream this? This is not about, in my opinion, not about coming up with, a few bespoke instruments or a few bespoke opportunities in a particular part of our market. I think what we really want to look to do is contribute as a bank and work with other, institutions, bodies, regulators, etc., to really mainstream these principles so that we ultimately achieve our overall objective here of creating impact. So thank you. That's my presentation, and I think we can move on to Q&A.
Fantastic. Thanks, Jared. Let's give it a second for people to type up their questions. And I see we've got our first one already.
Okay, I'm trying to locate it.
Oh, that's fine. Let me. So first question: financial institutions use security as a determinant of pricing. How do you have shared value in this environment?
Yeah, so I mean, I think it's a really good question. And I'll answer it as follows. So, you know, we will always consider security in pricing. I think there's just some regulatory and capital enablers to actually doing that. But we're particularly excited about how we can incorporate shared value into our pricing models. It's something we've started the process on. So I'd say our approach right now is fairly simple. We do have an approach which I think is positive, and I feel we're heading in the right direction. But I guess to the question, Natasha, a big challenge is, you know, how do we effectively bring that into our pricing models going forward? There are opportunities, you know, and I think we've already touched on some of it. There's a huge correlation between these principles that we talk about and performance of financial assets. So if we can quantify that well enough within our business, then we will be able to price for that effectively.
Thanks, Jared. Next question, how important is the role of senior strategic leadership to driving this agenda within large institutions like RMB? And what signaling is coming from your senior management in this regard?
Yeah, I think it is absolutely critical. You know, when I took on this role, I sat down with James Formby, the CEO at RMB, and we had a long discussion about this. And you know, just from my side, everything that James told me, he's lived up to. You know, from a CEO perspective, there's no doubt that there will be tension. I think you know, we've already heard a bit about trade-offs. I prefer the word tension, and I think for me it's just about you know, properly understanding what we're looking to achieve and properly factoring in these principles into our value proposition. And once we achieve that, we can start you know, moving beyond trade-off and really start appreciating what this can do for the long term you know, value proposition and health of the business. And that's been appreciated within the senior level at the bank, if I talk about our executive committee. But there is no doubt that the tensions that have been created by COVID-19 are very real. And as a bank, we have to firstly promote financial stability over the medium term. But in that, you know, lies the opportunity for shared value.
And Jared, you touched on this in terms of the issue of trade-offs, but this is a question that we hear quite a lot. Are you and your investors expecting to and prepared to accept a trade-off in returns in the pursuit of societal aims and as we call it, ESG?
So I'll start off by saying that the deals that we've done to date, and you know, I said up front, we're not looking to claim anything, but we have done a few deals where we have met our objectives. And just to be comfortable about the fact that the value proposition was a good one for the bank. So I think firstly to say that. To move on from that, I think we're quite privileged as a bank because we can originate assets for our own balance sheet, but we can also originate assets for the market. So there's quite a spectrum of opportunity when we speak about this point specifically, Natasha. So where we looking at our own balance sheet, you know, we will always recognize the fact that we've got many responsibilities to many stakeholders. You know, not just shareholders, but our depositors as well. So we will continue to promote discipline in that regard. But what we can also do is leverage our network, because we have, you know, just access to an incredible network, and really come up with structures that are multi-stakeholder in nature, and that allow for this concept of blended finance to really become mainstreamed. And by focusing on that, we think we can use our skills and our expertise and ultimately develop products that result in I would say a more appropriate cost of finance for marginalized communities.
Yeah, it's a great point. And I think we're seeing more and more research coming out saying that there really doesn't need to be this trade-off. There can be, and there will be in certain circumstances. And those are the places that you use blended finance. But the fact that we're achieving impact goals doesn't necessarily mean that we have to be taking a trade-off. There are a bunch more questions, but I'm afraid we're running out of time. So we are going to move on. Thank you very much for sharing your insights, Jared. Always great to hear your insights.
Great, thank you.
All right. Next, our next speaker is going to walk us through the COVID response and the next steps for Eskom's pension and provident fund. Ndabe, let me hand over to you.
Good afternoon, everyone. Name is Ndabe Mkhize. I'm the Chief Investment Officer at Eskom Pension and Provident Fund. We are an asset owner, but also an asset manager. 2/3 of our assets are managed by external asset managers, but 1/3 of our assets are managed in-house by a team of analysts and portfolio managers. So we have a team of about 22 in the investment management unit. So when looking at what was our response in the at outset, especially more in the emergency phase, I think the important thing for us was to ensure that our staff is safe. It's as we know, back in the BC days before COVID, when most of us used to travel or on airplanes, we were told that if there's turbulence, you need to ensure that you take your oxygen mask and put it on your nose before attempting to help others. So we ensure that at least we, our staff, can breathe, so that we can ensure that our pensioners get paid. I think for us, COVID-19 took place when we were busy with a pensioner administration system, actually moving from one system to another. And as you know, projects tend to be very difficult because you never know what spanner you can find in the works. So that spanner was thrown in the works and we were able to deal with it. So it was important for us to close that well, ensure that we can pay pensions as they fall due. Because we also didn't want our pensioners to be the ones who need to be rescued. That happened well, and I'm pleased to say that the project went successfully. We wanted to also ensure that those of our staff who can work from home can actually work effectively and productively from home. But those who are essential, who had to actually work in the office, that they remained safe. And lastly, but very important, to ensure that our funding ratio remains strong, so that we can indeed continue to be sustainable and not have our pensioners or those about to retire panic. I'm pleased to say that even though we had the worst recession, with the assets falling down by 33% in just 25 days, if you compare that with the Great Recession of 2008, the markets fell down by the same amount, but over 160 days. Our members did not have to worry about retiring on less than what they had expected. And our funding ratio or our funding status was still well in excess of our liabilities. So we're happy with that we've built a fund that is sustainable. And I think when the markets were falling, our performance did better on a relative basis. So I think that's to show that we've always taken risk into account. We've always taken sustainability at the heart of everything that we do. But going forward and then looking into what else are we doing as a response to COVID-19, I felt like probably dealing mainly with the third question before dealing with the second one, which was what have we been doing in the past leading up to this? But in any case, I'll just respect the order of questions that I got. So what we have been doing is to continue investing in real assets. Just for lack of jargon, real assets, investment in infrastructure and direct property or real estate, and as well as investing in private equity strategies, both in South Africa rest of Africa, and internationally, which is consistent with the way that we have our asset allocation, being in SA, rest of Africa, and in foreign and in global markets. We saw that as something important, especially because it allows us to be able to drive a lot of impact. Impact investing works very well in private markets, not exclusively, but at least there you can have side letters, you can have be direct and shall I say, purposeful into the areas you want to invest in. We also have been assessing proposals from asset managers who have made headlines recently as launching their COVID-19 recovery funds. We have two so far from the large players, and we would also obviously be able to see what they stand for, what they actually are going to do, and where exactly they're going to play a part, whether be it in the debt side of things or in equity, and exactly just some of the impact investing dimensions that they will take into account. As an asset owner, that's probably one of the best things we can do, is when there are people who are doing something about this, be able to help. We've, as a fund as well, been able to work with some of the people, especially the guys from Intellidex, who are wanting to come up with a COVID-19 a bond fund with a real return, but a lower return that could be used as well to put a response into this. So I think our thought leadership has been brought to bear, and in helping some other people create some solutions that are going to be more countrywide, more at government level, but at the same time being able to listen and ask the right questions and consider proposals that are coming to us from some of the financial services players. In addition to that, we do have private equity managers that we had made commitments to the previous year, who had raised some funds. And obviously for this, is going to be a great opportunity for them to have a very good vintage in terms of private equity. But one of the things we're insisting on is that they take impact investing into account. It's not just financial returns, they're very important, we need them. But more importantly, it's also the impact side of things, so that not only would we have enough money to retire on, but also a good enough world to retire into. And I think it's a message we've been spreading in various fora that we've been speaking. We are enhancing our policies. We've always had an impact investing policy or developmental impact mandate, but we have now enhanced that impact investing policy to make it more robust, to link it to the SDG goals in a more tangible manner, and to ensure that we put things that enable us to actually measure. We've also in the process of finalizing our ESG policy, and that will be more an umbrella. And again, we've always done those things, corporate engagement, proxy voting, but to house it nicely and to make sure that even our ESG policy talks to our impact investing policy, and everything is aligned, that we've got a climate change leg to our ESG policy, as well as just transition, because you can't just go and say, day one, take money away from Sasol, don't support ESCOM bonds. You need to look at the impact of that, and there's rather focus on a just transition, on engagement, but being clear about the targets that need to be made. Integrating transformation as part of that, as the S part of ESG, but not in a crass manner of let's just have BEE, but and we've been able to have a nice way of linking where transformation fits in the whole role of dealing with inequality, with poverty, with making sure that the supply chains are opened up for those who were previously disadvantaged, some of the small, medium enterprises, all of those things, when seen holistically, not just in a black and white label of BEE, but ensuring that it touches on the right things, is becoming more coherent, especially in this COVID-19 environment. Things like education and healthcare are important, and we've seen it's not sufficient to have a part of the population that is healthy, that's on medical aid, that exercises and jogs every now and then, and another part that even if they wanted to actually be healthy, they just can't afford it. They just can't access healthcare, because those people who can't access healthcare, when they fall sick and you have something like a COVID-19, the few who are healthy won't be healthy anymore when the rest of the population has infectious diseases. So it's important for us to continue, and we've been doing that. So I think this dovetails nicely with the third segment of also what have we been doing in the recent past. I think for us, it goes back a long time ago. We've been doing impact investing or developmental investing for the past 20 years. We've invested in things like affordable education, affordable housing, healthcare, rural and township shopping centers, have looked for opportunities as well to invest in something in small, medium enterprises. So I think for us, we've been doing those things, and we are continuing to do them. I think as we continue talking to other asset owners, crowding them in, we are seeing that impact. And I think the fruits of this are being recognized. We never do these things for the accolades and for the awards, but when other people take notice, I think it just goes a long way towards building that momentum towards that. So we have received a PRI, which is the Principles for Responsible Investing, used to be called UNPRI. The PRI Leaders League, being one of the top 50 asset owners or players in the world who were recognized for integrating responsible investing when selecting managers, both in public markets and in private equity. And for us, being the first pension fund, Eskom pension fund in Africa to get this was a good accolade. But in my mind, it even demonstrated that other global bodies are recognizing what we do, that we say what we mean and we mean what we say. In selecting our managers, we are taking that into account, both in the listed markets as well as in private markets.
Ndabe, I'm sorry to interrupt you there. We're just running a little bit short on time. So could I ask you to wrap that up, and we've got a couple of questions that we can address before we move on.
Fantastic. So I think just on the last thing that I've been doing as well on the real assets, crowding in other players so that we can be investing in real assets in a meaningful manner. And lastly, in terms of building better, I think talking the same language, having a taxonomy on what is responsible investing, what is impact investing, is going to be important, so that not only can we do the same thing as a collective, but when it comes to measuring and checking the performance of across asset managers and across asset classes, that we would have consistency there. Thank you very much, Natasha.
Thanks so much, Ndabe. So I'm going to jump right into questions. There's a question here, and I think it's an interesting one given your unique perspective as an asset owner in this conversation. What do you see as being the scope of impact investing in South Africa, and do you foresee allocating more capital to this area via the fund managers?
Yes, it's something that we are taking seriously. In my mind, as more asset managers embrace it, no greenwashing, no having a veneer of impact investing while not doing it. So we do a thorough due diligence in those asset managers who know us. When we're finding the right thing, we will invest. And we are looking for different opportunities. As I said, a large chunk of our money, 2/3 of it, is managed externally. So we are going to be giving mandates in this space. In the real assets portfolio, we've got about 8 billion rands there. And also we still have dry powder in our impact investing fund.
Great. And then, Ndabe, can you explain the role and talk a little bit about the Asset Owners Forum in building back better? And where does the most potential lie with asset owners who might not be quite as far along in their thinking as EPPF is?
I think it's important to have a peer-to-peer network, a peer-to-peer conversations. You know, when you're being advised by asset managers, with all due respect, sometimes it could feel like they are channeling into a certain direction to then come and say, well, we have a product for you. So even though most of them are actually all above board and will not lead you astray, but it's a lot more comforting when you are talking to another asset owner and listen to them what they have done. So we think the Asset Owners Forum creates such an environment that asset owners can talk about what they need and not have to worry about the conflict of interest or really whether there's some ulterior motives being brought about. Also, it's a safe space. It's easier to confess to another principal officer or to another pension executive that you don't know what this private equity is all about than to talk to a private equity asset manager when they're presenting something to you. Lastly, I think it allows those pension funds and other asset owners that have not been able to make headway into the space to be able to, in a way, leapfrog and not have to go through the learning curve that some of the bigger funds went through. And in that way, it will also help the established ones, the GEPFs, the EPPFs, and many others, sentinels of this world, who are already investing in this space, that we won't be the only LPs or limited partners. So it's a win-win situation. And we're coming together to talk about such opportunities in real assets in private markets, looking what government has to offer, but also what the private sector is offering in terms of projects, ensuring that we invest in projects that are bankable, where we are going to see a clear impact and a clear return and sound governance and risk management.
Fantastic. And then last question, and apologies to everybody whose questions we didn't get to. As an asset owner, what are the metrics that you're using when you're measuring impact?
I think I'm going to talk about what we have now, and it's not robust enough, and then allude to what we're going to do going forward. At this stage, that's why we needed to upgrade our impact investing. It had been about, let's go to the areas that we know we're going to have impact: affordable education, making sure that it's quality education where the students are passing, where they're integrating all the techniques that one needs. I think right now, even being able to have online programs, but make sure that that's affordable, and healthcare, rural township, where we know that when you put a shopping center there, it catalyzes a lot of growth in that area. Going forward with our impact and with the enhancement, we're going to be looking to see the number of jobs created, the number of patients who are visiting that hospital, the number of students, how they are passing, all of those things, and then also be able to see how the outcomes are mapping back to the SDGs, to the things that we said we want to do, and to get a player or players who will be able to also, having looked at what we have done, can also conduct a study to see what impact we are also having on the economy as a whole.
Thank you so much, Ndabe. Great to get your perspective, and thanks for joining us today. And finally, our last speaker for this afternoon is the Chief Sustainability Officer at the JSE. Shamila has been driving innovation in sustainable finance at the JSE and is an absolute expert in this field. So we're very lucky to have her joining us today. Shamila, over to you.
Thanks so much, Natasha, and very good afternoon to everybody. I feel slightly better about being dressed the way I am, given that I've seen Elias in his outfit and Jared as well wearing their thicker gear. So, Natasha, just to confirm, I know that our timing is a bit of an issue. How much of time do I have?
you've got a full 15 minutes, so feel free to take it all. The last thing we have to do after you is to say thank you to everybody, and I can do that very quickly.
Perfect, thank you. So what I'm going to do is very quickly cover a little bit about what the JSE has done immediately in response to COVID, and then touch on what we see as the role of the exchange more broadly in actually creating an enabling environment for better sustainability practices to grow, and how we've seen that play out over the number of years, in fact, that the JSE actually has been involved in this space. So at the outset, just to talk a little bit about what we've done, of course, similar to most companies, the need to transition very quickly and transition our workforce to be able to work from home was critical, and we were able to do that at speed and with just a few people at the office who were absolutely crucial for keeping the markets running. So all of these investments that we've been talking about actually can be executed on, and that managers and can actually transact in the market. So that has been quite not an easy task, as you can imagine. Most of you would be aware that there was huge amounts of volatility, particularly in March, and so coping with that in many instances, some of it was even new to us. So under the circumstances, I think their hats off to many of the JSE employees who really did their best in that regard. So the transitioning to work from home was obviously that, taking care of our employees, and I think more and more a focus on the mental health, the physical transitioning, of course, yes, but the number of new circumstances that people are faced with, I think from a leadership perspective, is critically important that that is taken into cognizance, and that support is given, and I think the JSE has been trying its best to do that. Then extending into the market itself, there are a number of relief measures that the exchange has tried to put in place, starting immediately with understanding that the smaller cap stocks are going to be potentially the hardest hit and the most difficult to maintain liquidity in. So immediately a reduction of 50% in trading fees for the small cap companies, trading, clearing and settlement, and a number of other relief measures within the market, including those in our supply development program, and increasing the rebates given to that. We also initiated the Trade for Solidarity move, which you might have seen, and we dedicated 2 full days in April of fees across trading, clearing and settlement to be donated to the Solidarity Fund, and asked the market to come along with us, and the response was absolutely overwhelming. I can't remember the number offhand, but it might have been in the region of around about 30 to 40 million ultimately that was generated from that effort and given to Solidarity Fund, along with our CEO and board together, and Exco deciding that they would donate about 30% of their salaries for 3 months, joining the president and the cabinet in that regard. So those were some of the things we've done, and we're continually looking to what other measures can be put in place immediately. And then turning to the long term, I think that our view has been that we need to continue doing what we've done, understanding that the world is changing really quickly and that our strategy evolves as it goes along. So in our context for sustainability, very quickly, we consider ourselves as wearing 3 faces. We've got the exchange as a company, a listed company itself, like many of you could be on the call, the exchange as the platform, so where trading actually happens, and then the exchange as the regulator. So there's a regulatory element that the JSE also does, and quite strict Chinese walls between the regulatory part of the business and the rest. So the regulators effectively those that look at the issue regulation side, and then market surveillance. So when we look at that, it's this context of what we do to run a stable business and the external sphere of control and influence. And most of what I'm going to talk to on building back better, on how one creates resilience, really does talk to this external control, the sphere of control and influence on what we do. So at the core, yes, we need to ensure that we have, we give access to capital and fair access to deep, liquid and robust trading platform, which is critical for the market infrastructure for the country. And then, of course, in other ways, lead by example where we can. So you've heard the SDGs mentioned up to now. So the Sustainable Development Goals are something we certainly believe is critically important, and really as a plan for all of us as to what we can reorientate ourselves towards in creating a society that we actually want to live in, and that we can do so knowing that we've done something to help create a better future, and not for other people, really. This is about us and our own future. And I think it was mentioned just now, it's like, is this going to be something that Ndaba said, is this a future we really want to retire into? So we looked at which ones we could perhaps make the most impact on, and there's a few that you can see outlined there. And then this is very quickly what I want to talk about is to our approach. So at the center of it, you see this sort of view of a person with a carrot and a stick. Okay, it's a baseball bat, not a stick, but it's about this view of how do we create an enabling environment for better sustainability practices and disclosure to grow. And considering that sustainability and your shorthand, your ESG, whatever you want to call it, but the thinking is really part of good governance. So at the heart of it, the JSE, from the time we've started on this journey as far back as 2002, in fact, said that we would really like to take more of the carrot approach to create an enabling environment, and that at the time that was really the right approach, and in time we will evolve as we see the need and as things change. So the first thing to consider is the JSE is really one player in a broader governance ecosystem. So if we look at this diagram starting at the top left-hand corner on the regulatory framework, this is about mandatory governance firstly. So what can we do from the mandatory perspective? And there's certain disclosures that we can look at mandating and that we have mandated that talk to the ESG agenda. And of course, why do we do this? Because once that information is in the public domain, it allows for stakeholders to make better decisions and to be able to price these things in, to factor it, and to give to try and level the playing field from a disclosure perspective. The next part is, of course, the broader governance regime. And for JSE listed companies, they need to report in accordance with the King Code of Corporate Governance and the provisions within there. For purposes of time, I won't go into much detail on that, but happy to take questions later on. Then if we move on to the next side, and the first side on the regulatory framework, we shouldn't underestimate the impact of having those things in place and what that means for broader disclosure, discussion, and strategic thinking within the market, and what it actually tries to promote. The second part on the right-hand side, on the top right, is the ESG investment tools. And there we're really seeing what can we then offer as tools for investment. So you've heard investors speak up to now, the asset manager side, the asset owner side. And then as the exchange is one cog in this broader financial services ecosystem, what is it that we can do? So we can try and make product available on the market that will allow for these assets to flow into things that have key outcomes in relation to sustainability. So the one thing we did is we created the predecessor to the FTSE JSE Responsible Investment Index is the SRI Index, which some of you may be familiar with, and that ran for about 10 years until it was replaced in 2015 with our partnership with FTSE and the Responsible Investment Index. And effectively, it's an index created where the constituents are those companies who scored above a certain threshold on an ESG rating. That rating is put together using the publicly disclosed information, so we don't engage one-on-one with companies. The idea, again, is to promote disclosure, and so the information that is taken into consideration in producing the rating is what is disclosed in the public domain. And so that then works on a model, which is the FTSE for Good model, tailored slightly for South African context. And then if a company scores above a certain threshold, they make it into the index. There too, there's the benchmark index, which is all companies that score 2.9 and above on a rating scale of 1 to 5. And then there's a derivative of that, which is the top 30 index, which then takes that same set of companies who make it into the benchmark index and rank orders them based on the ESG score, and the top 30 highest scoring companies then make it into the top 30 index. The benchmark index is a market cap weighted index for those who care about those sorts of things. And the second one, the top 30, is an equally weighted index. So there is a differentiation between the two. Then we look at the other asset classes. So obviously this predominantly affects equities. Across the board, what else can we do? In 2017, we incepted our green segment, and that's where the green bonds were listed, and so had an actual listings framework. In many instances, in certain markets, these things move ahead of regulation. In some countries, often there's a regulation or a guideline that comes down from national government or the equivalent of national treasury that would say this qualifies as green and sets the framework and the context, and then an exchange just just adapts that and creates a segment and refers back to that. In our case, we looked around and there wasn't such a reference point in the country. And so we said, these assets are critical in our country. What can we do to enable that? And then created a green segment based on global best practice. So there's been 1 municipal bond and 3 corporate bonds listed to date. And that segment is now going to be extended imminently to include social bonds and sustainability bonds, where, of course, the use of the proceeds are then actually ring-fenced to meet social outcomes, sustainability outcomes, and an investor can look at those, and they've been globally very well received, usually oversubscribed. And in the current context of COVID, you'll see that there's been a huge surge in COVID bonds being issued, many of them following the social bond framework, and has been the preference of investors in relation to actually following some kind of framework. So if we're talking about things that are going to go into the future, these are the kinds of structures that we're seeing potentially that also talk to impact because of the measurable outcomes that they tend to seek. And then, of course, ESG futures. So on the top 30 index, I mentioned there's an ESG futures contract. We've also got project bonds, and we're looking at a number of different offerings, including current market consultations on potentially doing a listed instrument for social impact bonds. So that talks to some of the tools that we're looking at. And then very quickly on engagement and advocacy, this talks to this whole notion of saying, how do we engage further in the market? How do we learn from what is going on to make sure we keep current and ensure that the South African market is looked at favorably by investors, that the provisions we put in place are those that are leading globally and that are relevant in local context as well. And so on engagement, ensuring that we can do that we have conversations locally. We have annually an ESG investor briefing where we bring together the investor community as well as the issuer community to have a conversation, to showcase what issuers are doing, and to also understand what investor needs are. And we then looking at how we change and evolve those platforms. We also do a number of customized presentations to companies, to boards. We've recently found a huge uptick in interest, particularly from issuers who are saying, please come and talk to our boards about what this means and why it's important and what is the perspective from the exchange on the market. So those are some of the things we're doing, and all of these things really create this environment where the longer term thinking takes root. So when we look at the topic that we were asked to look at today about strategies that align with building back better and looking at a more equitable, climate friendly, cohesive society, we consider that all of these efforts that we have been engaging in a number of years are completely congruent with that objective, and hopefully will continue to do so. And some of the how, of course, will evolve in the context of the exchange. On advocacy, finally, we sit on a number of committees locally and globally, again, where we both learn from and contribute to. And these are things that we find to be particularly valuable. I'm going to quickly touch on and double click on the last one there, which is the Global Investors for Sustainable Development Alliance. We've actually taken a step back, a number of the engagements that we currently have in the market, and focused a lot of attention on this. So our CEO is co-chairing at the global level this Global Investors for Sustainable Development Alliance, whose primary aim is to scale up private sector funding towards the SDGs, and saying that these SDGs are never going to be achieved if there isn't a lot more contribution from private sectors. So it's 30 companies from around the world, predominantly financial services, really large investors where the only exchange represented globally, and really looking at what they can do in that regard. It's not to write another report. There are some very tangible outcomes, and I'm going to go straight through to that. So some of the recent developments, which I think are really critical that we're focusing attention on, is piloting a definition for sustainable development investing. So this group only came together in October last year, but the first interim output has already been delivered. And this is with huge input from a number of the investors within that grouping. What can we look at, and how do we define sustainable development investing using the SDG lens, understanding positive outcomes and impact and the like? So that is something that's been piloted within the members of the GISD Alliance. We're very open to share this. If you would like to have a look at this and consider what this might mean, as we understand, many people are grappling simply with the issue of how do we define this, what does it mean? We're happy to share that. We're also finalizing a guidance note at the moment on investor preferences for COVID bonds, given that within that grouping we have the likes of PIMCO, APG, Bank of America, you know, a lot of serious investors who are looking at this. So it would be something that could be used by both corporate and sovereign issuers, and very quickly honing in on the use of proceeds to COVID response, building back better for the future, and linking those directly to SDG targets at the target level. So it's an easy reference guide for those looking to issue into the market at the moment, but also investors who think, how should I be thinking about this? This could be helpful for both. In the longer term, looking at delivering on an investment typology, you've heard the terms of blended finance and the like. How do these things work together? The need for innovative financing tools, that's also been looked at within the group, and the group will deliver a typology that seriously maps out where some of the gaps are right now, and then matching those with the needs and the opportunities to create new vehicles, new instruments, and the like. The SDG Navigator, one-stop shop of frameworks and measurement tools that, again, we want to make a public good and say that, you know, these things shouldn't be proprietary information and take you 2 years to just understand what's going on. Here's the mapping. This is what investors, issuers are looking at and using. And please, you know, have a look, and it should help you very quickly to get up to speed on what is relevant in the space of investing and sustainability generally. And then, of course, we're also looking at matching platforms for SDG investing and saying, you know, there's a critical need on some very important thematic areas like water, sanitation, renewables, and a few things that there are needs, and how do we create the platform where there's investable projects and then bring together investors who are interested in that, maybe looking at where the gaps are and the misalignments between the needs of the two. And then how can we actually contribute to making sure that those things are then overcome and creating those innovations around that. So those are some of the things that the Alliance is looking at and that we're very much involved in, including looking at the European Union, which we believe that what they're looking at in relation to green finance and sustainable finance is potentially going to become the reference point for the world. And they're looking at taxonomies and the like, and how do we engage with that to ensure that some of a more global view, particularly a developing market view, is contributed to that process. So I'm going to leave it at that. I haven't covered a lot of what I would have wanted to, but I'm hoping that that is in addition to all the really helpful inputs that you've already had today. Thank you.
Thank you. In the interest of time, we're not going to have the opportunity to dive into questions, but I wanted to let you finish that because the content on the slide looks very interesting. So thanks very much for taking the time. Thank you so much to all of our panelists for joining us. It was really great to see real life change makers in the market making things happen. So big thanks to them, and thank you very much to all our attendees for joining. We will be sharing the outcomes of this webinar, including the link and a report, in the next week or so. So stay tuned for that, and we'll keep the conversation going. Thanks a lot.